What's going on, guys? Welcome back to another video here. I think this video is a very important one for all of you guys that are looking to actually find the success in the market that you guys are looking for, but I don't want to waste any of your guys' time. So again, let's get right into it here. If you wouldn't mind hitting that like button, hitting that subscribe button, and commenting down below as well, just helps out with the YouTube algorithms here so we can get these videos out to as many people who actually want to learn. So we're going to really be talking about three and a couple of more main reasons why you guys are not having the success that you want in the market, whether you're a swing trader, day trader, forex, futures, options, whatever it is. The first thing that I think that we need to talk about here before we really get into those main three reasons is your expectations going in are wildly misaligned with what the reality actually is. A lot of you guys are coming into the market thinking you either want to turn a really small amount of money into a very large amount of money, or, and I think this is a really important one here, you want to then become full-time traders. Now, I would actually say that most of you don't actually want to be full-time traders, or you shouldn't want to be full-time traders, and here is why. What a lot of people are thinking about in the market when they approach things in terms of consistency is that, oh, let's say that you are able to make 1% per day. That's a thing that's thrown around a lot in the trading space on YouTube, Instagram, Twitter, TikTok, wherever it is. And it's honestly, it's all garbage. It's all nonsense. Consistency isn't being able to generate returns per day. It's not even per week. It's not even per month. It's per year. When you look at trading, you have to think on a longer time horizon because sometimes there may not be very many opportunities. Sometimes there may be a lot of opportunities every single day. But what so many of you guys are doing is you're just looking at the market every single day and thinking, ooh, I need to make my 1%. That is not what the market is about. Now, yes, it is good to look for those smaller days, those 0.5% days, that 1%, because yes, the effects of compounding do end up helping you over the long term. But you have to be able to actually think long term because that type of thought process and thinking, it actually can end up making you think very short term and lead to a lot more significant losses than you need to be taking on any given day. Now, going off of this point here about quote unquote being a full-time trader, well, a lot of you guys are employed. You either are very successful at what you do, moderately successful, or you'd like to be more successful than you currently are at what you do. Now, trading is a skill that anybody can learn. I like to say this all the time. Guys, you know, I've been doing this type of stuff since I was 14 years old. There are so many things that I know about markets and how things move and everything like that, that again, it's not as important to what is actually occurring on the charts every single day and what is actually important in helping us make money. Now, when we think about trading and how anybody can do this in those jobs that you guys have, let's say that you were able to make an extra $20,000 a year from trading and you're already making a decent income. Well, you've just added a nice chunk of cash to your overall income for the year. Now, yes, again, that isn't necessarily enough to consider going full-time, but let's actually pick a number that would maybe be sufficient for you guys to go full-time here. Let's say it's $80,000 a year that you were making, and let's say you were making about $60,000 to $70,000 a year at your current job. Well, now you have basically a six-figure income. One of them is effectively guaranteed. The other one is incredibly variable. What you guys don't necessarily understand about trading, and this goes back to my earlier point of focusing in on that 1% per day, you don't have an idea really of what you're then going to be making on any given week, any given month. And look at the most successful traders that you guys view as the most successful traders out in the trading space. You will see that all of our month-to-month gains are very, very, very different. So thinking about overall long-term security, long-term financial security, if you have a very highly variable income, even if that income is high with trading, because it definitely can be, well, you're gonna have a lot more stress involved because you don't necessarily know the next steps forward. Being a profitable trader actually can sometimes add more financial problems to your life than actually take away. And that's something that I need you guys to understand because I like to say this a lot, that in order to have different results from everybody else, you need to think and act differently than everybody else. Now, one of the first things that a lot of people use in trading is, what is the RSI? What is the MACD? Is that something that you want to base your whole entire trading strategy off of? In my opinion, not necessarily. You want to be able to develop that edge. So speaking about those expectations here, let's get into really the three main reasons why a lot of you guys aren't having success aside from those expectations, and then kind of continue on exactly how to solve some of these issues. So the three main issues are, it's your method, your mindset, and your money management. Or in other words, your strategy, risk management, and psychology. So for most of you guys right now, your strategy is terrible. Now, the strategy that you might think that you're trying to trade or you're actually looking to trade probably isn't that bad. And if you were to test it, if it is a strategy that's actually back testable, but that's a whole other conversation here that we'll probably touch on in this video, you actually aren't trading the way that your strategy is actually telling you to. And that's a really, really important part. Now, one of the solutions for this obviously would be to journal your entries, go back and make sure that you're actually taking the trades that you are supposed to and avoiding the ones that you are not. A losing trade doesn't necessarily mean it was a bad trade. A winning trade doesn't necessarily mean that it is a good trade. The way I define winning trades are ones that, again, I follow my plan to an exact T, follow the system to an exact T, regardless of the outcome of the trade, whether I hit take profits or I hit stop loss. Because over time, especially with the strategy that I use and I teach you guys all of the time, again, it had 0 losing months in 2023. So again, why would I want to try and get fancy with the strategy and start to do things in situations where I should not do them? It doesn't make any sense to. Logic is always going to win in the market, guys. Now, going off of that earlier point where we were talking about how some of you guys may not be following the strategy that you guys think you are, well, then that leads into your psychological responses to what's happening in the market. You start to see things that aren't there. You're like, ooh, this trade setup could be good. I'm going to hunt for a reversal here, even though it's not even remotely close to the trading system that you are looking to trade. You're getting antsy, and what you're doing is you're thinking about those expectations that you have in your mind of, oh, I want to make X amount of money by this time, or I want to be a full-time trader, or this is what... Guys, slow it down. Slow is smooth, and smooth is fast. You do not want to be rushing things in the market. You will get there when you get there, but you will never get there if you try to get there in one day. That is very important. And then risk management, which I want to show you guys right here as well. An example of honestly poor risk management going well in this case here, but we definitely have to talk about this. So coming over here, this is a screenshot to a tweet that I put out this morning. We've been talking about AMD here, how it had a lot of potential to the upside. I'm sitting up about 70-something% on this trade currently. It's flickering around. But then we have this individual right here, iPerfect, making about $122,000 today from what I would assume is mostly AMD. His account is up about 467%. Now, yes, this is awesome gains. This is life-changing money that this individual probably just made here in one individual day. But it doesn't necessarily mean that these results, obviously, are going to be replicatable. And managing your risk in this way, if this continues, is definitely going to lead to a catastrophic blow-up where you see this number in the green right here of 122,000. Well, that could easily flip right back into the red. Risk management, guys, is incredibly important. And when you think about those three key things, the method, mindset, money management, or in other words, strategy, risk management, and psychology, those three things, when they work together, are able to give you that, let's say, quote unquote, consistently profitable results over time. And I think of that as in over a year, not in a month, not in a quarter, over years of time. So what is the actual solution to some of these issues that you guys are having here? Because I know that there's a lot of you guys out there that know the right things to do in the market, but sometimes you just see things happening on the chart. You take a trade that you know you shouldn't take. It blows up in your face, and you're sitting there kicking yourself after thinking, why would I do that? Here are the solutions for this, and it actually relies and kind of lies in what you actually look at as your strategy. So when you think about risk management in psychology, yeah, those are going to be things that, again, risk management, if you're disciplined enough to be able to go in and say, I'm only going to risk X amount in one trade, that's going to take care of a lot of your issues. Psychological issues are going to be a lot harder to solve. Now, one of the best ways to solve them, and I've seen them with countless of my students in there in the day trading mastery course with that 0 losing months in 2023 strategy. Again, shameless plug here. If you guys aren't interested in that, the 30% off code is STV30, link down below there. 0 losing month strategy there in 2023. But the most important part about this strategy in particular is that it's based on a very simple system that is proven to work. Simplicity and proven to work. Those are very, very, very key concepts, guys, because when I look at the market on any given day, let's actually just pull this up here on ES. When I'm looking at the market on any given day and I see this chop or something's happening up here, if it's not following my trading system, my trading plan, or my trading rules, there might as well just be no candles on the chart because there's nothing for me to do. The market is not giving me the opportunity that I know that I have an edge in over time. An edge, really, if you think about it scientifically, is just having a positive expected value of the overall outcomes over time. That's all that is. Now, the other thing that you need to get across to yourselves when you are learning any strategy, it doesn't have to be the one that I'm teaching you here, but what you need to understand is the reasons why. You have to understand the reasons why something works the way that it does. And that's how I learn things. Again, this is going to go into different learning styles there, but when you think about knowing the reason why you're doing what you're doing, it becomes a lot easier to not stray away from it. Like in my strategy in particular here, I know that, again, when buyers and sellers are going to react at this very specific levels that I'm looking for, most people are going to be on the wrong side of the trade most of the time. So those snapbacks into profitability are usually very quick based on a lot of scientific data over time. Now, again, I've calculated that data. I've gone through many, many years of that data, and I know that it works. Knowing that it works is the first part. Knowing why it works is the second part. If you guys are in any of these trading groups out there, what you need to ask the question is why? Why does this work the way that it does? And you need to be able to have that explanation, because what that enables you to do is think to yourself when you're getting into these scenarios of, well, maybe let's say back up in here, I was hunting for a reversal, or maybe right here, hunting for a reversal down, and you would have ended up getting blown out of this trade. If you know the reasons why, when you think to yourself, ooh, I might want to take a trade that's straying away from my system, it becomes a lot easier not to do it because you know what the results are over time if you just follow the plan. And that takes out all of the different psychological issues that you guys may have on a day-to-day basis by just answering a very, very simple question: why? Now, at this point in the video, guys, you might be thinking to yourself, well, yeah, these are some good points that I've made, and those are things that you're going to start incorporating into your trading strategy, but what are some actual hard steps forward that you guys can actually take in order to get going in the right direction, thinking about trading in this way? Now, the first thing, again, another point I'd like to make is, again, most of the trading gains that you guys are making, again, it's kind of a means to an end. Like, trading in general is really just used to fund other things. If you don't really love what you're doing here, you don't love looking at markets, looking at the news, seeing where things are going to go next, analyzing charts, testing strategies, then this is not something that you probably want to do for the long term in actually trying to become, let's call it, a quote-unquote full-time trader. But you can definitely have success in the markets and use those profits that you make to funnel other opportunities, buy long-term investments, some cash flowing real estate, and then set yourselves up for the future. But let's get into some of these hard steps here that you guys can actually take in order for me to be able to feel comfortable sending you guys on your way in the market. So the first thing that I want you guys to do is whatever strategy that you're trading right now. Again, I make this super easy for you guys in that course down there, making sure that the strategy and the rules are actually outlined for you. But again, it doesn't have to be my strategy. It can be whatever you want. What I want you to do is come up with a very, very specific set of rules that are back testable and repeatable. If you're doing something in the market that is not back testable and repeatable, you're trading with what's called discretion. And I can tell you right now, and your experience has probably been this, your discretion sucks. It's terrible. You are not able to use your thought process and your feelings in order to tell where the market's going to go next. When I'm taking trades, guys, it is without any emotion, without any feelings. My system says execute, and I do. But why? This is the next hard step. So first, remember, back testable and repeatable. Well, then once you have those rules, let's say you're only looking for trades between these couple times a day, you're looking for this very specific setup to form, and you're looking for a very, very specific risk to reward. Again, those are things you have to have in that plan there. Then what I want you to do is back test an entire year, maybe 2 years, maybe 3 years if you have the ability to do so that you are then able to set your expectations up accordingly, knowing the win rate, knowing the average risk to reward that you're getting on these trades, so that you realize that the outcome of one individual trade is meaningless to the overall big picture. Now, that is really the most important step here, and it is something that I would recommend all of you guys to do, regardless of whatever trading strategy that you are trading. If you find that you can't do that with the strategy that you're trading, well, it's going to be really hard for you to have success over time with that strategy, because you're just going to continue making these psychological errors. Now, the second thing that I want you guys to do is keep a journal. Now, again, everybody says this, but people journal in the wrong way. We've gone over this in the past, but you need to be very specific as to what you're journaling. You have to be thinking, okay, what was I actually looking for here? What was the setup? What were all of the different things happening in the market telling me that I should do or should not do? And how did you manage that trade appropriately or accordingly? Did you follow the rules? Were you just hunting something? Were you just thinking that the market was going to do something next? Those are all things that you need to have in your journal to understand and hold yourself accountable to the market every single day. Now, the market's already going to hold you accountable, but you need to mentally hold yourself accountable so that you actually can grow as a trader. And obviously, to the risk management part, guys, it's very simple to not be risking more than 1 to 2% of your portfolio per trade or even per day, if you are actually seeing a solid trade setup. That's honestly the easiest part here, is making sure that you are not over risking. So guys, that's going to wrap up this video here. If you did enjoy this, make sure you guys hit that like button down below. Comment down below if you have any thoughts, concerns, questions, and I'll see you guys on the live streams every single day. Other than that, team, I'll see you in the next one. Peace.